We know our housing markets in the capital cities have delivered month after month property price growth for much of this year. But today, Dr. Andrew Wilson and I are going to discuss what's happening in our regional markets around Australia in each of the states. And you're going to find some have performed really well, and there's also a remarkable divergence in regional property performance, some not as well. We're going to also talk about rising building costs. They've suddenly crept up again. What does that mean for the cost of new dwellings and our property markets and inflation? And boy, have our auction markets performed strongly. We're almost calling them boom time auction results. Let's hear what's going on when I chat with Dr. Andrew Wilson. Now, if you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Auction clearance rates are soaring, building costs are rising, regional property markets, well, some of them are booming. If you're a property investor wondering whether Australia's real estate market's turned a corner, My Housing Market's latest update confirms that what many of us have already been sensing on the ground. Confidence is returning, and with it, momentum. So in this week's Property Insider Chat, Australia's leading housing economist, Dr. Andrew Wilson, is going to explain to us a bit about what's happening in the regional markets and in the auction results, as well as building costs. Hi, Andrew.
Yeah, good day, Michael. And we're at the end of July now.
Wow.
Into another month in a couple of days. So the year's flying away, and we'll be talking spring selling season soon.
Well, in a couple of days' time, we'll do our end-of-month report to hear what My Housing Markets find around our capital cities. I know up to now they've been delivering month-on-month property growth for much of the year. But what I'd really like to know this time, if we could, is discuss what's happening to our regional property markets. Now, clearly, there are multiple markets from the big regional cities to the small ones. But what's My Housing Market found happening around Australia's regional markets?
Well, what's interesting, Michael, is that the major regions, by regions we mean local government areas, in each of the states tends to follow the energy that's coming out of the capital city market, which I think is quite interesting. And if we start as an example with New South Wales, of course, we know the Sydney house prices and unit prices have kept on keeping on really consistently for the last few years. And continue to, if anything, strengthen this year, Michael. And it's interesting to see when we do look at the major local government areas of New South Wales, they've also been reporting over the past year similar results, if we average them out, to what the Sydney market has recorded. And some interesting, the top performing market has been Albury, where prices have actually increased by 20% over the past year. These are house prices, Michael. I think that's Albury was dragging the chain a little bit for a couple of years, but also it has the lowest median house price of any of the major LGAs. And I think that affordability advantage is something also that's connecting with buyers locally. But certainly the top performer is Albury, up by 20.9%. It's also interesting that Ballina has been a strong performer, up by 10.7% over the past year. Of course, that's a northern New South Wales local government area. And I think it's gathering part of the energy, not just from Sydney, but also from southeast Queensland, as we know has been a boom market for a couple of years. So Ballina taking advantage of that, of higher demand levels, up by 10.7%. Newcastle up 10.2%. A regional market, but, in a sense, quite proximate to Sydney, so up by 10.2%. And similar to Ballina, Tweed, of course, which is adjacent to the Ballina local government area, it's had strong result, up by 7.9% over the past years. And when we go down through the list of the major local government areas, Wollongong's actually the underperformer, down by 2.7%, but that follows a period of strong growth in Wollongong over the previous year. And it's the only local government area, Michael, to have recorded negative growth over the past year. And I'm reasonably confident that won't be the results when we look at the data set next time. But yeah, if we average them out, those top 10 capital city results, we get the result for Sydney over the past year. So,
but they're very divergent, aren't they? Remarkably so.
Well, they are, but as I said, it's following the energy of that capital city market, and also the Sydney market. And also what's happening in southeast Queensland, adjacent to that market is also logically attracting buyers as well.
Well, the lifestyle and coastal locations seem to be attracting some people from Sydney's higher price pressure. Victoria, how did that go?
Well, there's, in a sense, that shows the relationship between what's happening in the capital city market and the regions holds, because it certainly hasn't had the same results as the New South Wales local government areas, but it's improving, Michael. And this is what we've been seeing in Melbourne, of course, which is a clear revival market. And we'll see, again, results from last week's auctions confirming that. But that's picking up now. The regional performances in Victoria are picking up. And again, it's the affordable suburbs or the affordable local government areas that are leading the charge. Shepparton, which is with Latrobe, the most affordable of the local government areas, the major local government areas, up by 14.5% now over the past year, Michael. And Latrobe, similarly, which is the most affordable of the major local government areas, up by 8.2%. Bendigo, a revival in Bendigo also underway, up by 5.4% now, Bendigo, over the past year. And that's sort of a approximate region, a bit similar to Newcastle, I guess we could say, is to Sydney. Bendigo is to Melbourne, up by 5.4%. And Ballarat and Bendigo, which tend to move together, Ballarat also up, but just by 0.9% over the past year. So they've been the growth local government areas, and we were showing no growth in the local government areas in Victoria, the major ones, in some recent data sets. So that's certainly turned around, Michael.
Other than in the more expensive and holiday and lifestyle locations, the Surf Coast, Geelong, Mornington Peninsula, where there's a lot of holiday homes, Macedon Ranges, where they did the block a couple of years ago, they haven't performed anywhere near as well.
And this again identifies the relationship with Melbourne, because it's those higher priced inner suburban prestige suburbs in Melbourne that have been the underperformers. Clearly, the inner east, the inner south, and the inner city, particularly the inner south and the inner east, have been Melbourne's laggard performers. And it's the same story with buyers in higher price ranges in the local government areas. Surf Coast down by 1.9%. That's improved a little bit. Greater Geelong, which is more of a suburban market, down by 2.9%. Mornington Peninsula down by 4.1%. Of course, that is a prestige region. And the Macedon Ranges, similarly, which does bounce around a bit, down by 8.4%. So again, it sort of holds that relationship, Michael, with not just the overall results, because when we average them out in Melbourne for Victoria, it also comes to around about what the Melbourne result has been. But it also shows the diversity in demand between price ranges. But nevertheless, the other point is that we're clearly seeing an improvement in the regional centres now compared to a few months ago. And I think that reflects what's happening, in Melbourne broadly.
Queensland Brisbane in particular has done very well in southeast Queensland. And once again, looking at my housing markets figures here, there's quite a divergence in how the various Queensland regional areas have performed.
Well, yes, Michael, but it's very, very strong.
Very.
Almost across the board. And again, it reflects what's happened in the Brisbane market and the southeast Queensland market particularly, which has been in boom mode for a couple of years. And it's worked its way right up the eastern seaboard of Queensland. And some of those more affordable, again, the affordability, I guess, advantages of some of those larger local government areas are working their way into higher levels of demand. Mackay up 28.7% over the past year. Michael, Townsville up 23.9% with a median of 619,000. And Townsville's really been an underperformer for a number of years, and that's revived strongly over the past year. Rockhampton similarly up by 20%. Fraser Coast up by 12.7%. So areas that have been missing in terms of prices growth for houses have certainly rebounded in Queensland.
Well, I have some thoughts on that, Andrew, because in my mind, property price growth in some of these regional towns have been driven by an influx of investors. They find it's cheaper, but they've been squeezed into these markets by a new wave of buyers agents all saying, I found the next hotspot. And in some cases, I think they've pushed prices significantly above the fundamentals and what the locals would be prepared to pay. 30%, 28%, 23% in a year growth is a lot. Latecomers to these markets may end up suffering a bit as prices stall or fall moving forward.
I also think, Michael, that there's been a lot of underlying demand that's been sidetracked because of lack of confidence in these markets. And I think it's the old story, we move from fear of being involved to fear of missing out. And I think a lot of the locals have realised that it's the time to get into the marketplace. So that pent-up demand, particularly in areas such as Townsville, which was clearly there over a number of years, is now being released, and there's no longer the sort of the fear of being involved in the housing market there because prices were falling, and they're now recovering.
Yes, sure.
And I think it's that momentum that we typically see with underperforming markets, and I think again will be a driver of the Melbourne market going forward once that fear of missing out energy grows. And in fact, it's markets that have been supercharged, such as Sunshine Coast and Noosa, have been sort of underperformers over the past year, but still Sunshine Coast up 8%, Noosa up by 2.1%. But look at the Gold Coast, Michael, keeps on keeping on.
Yes, it does.
Again, by double figures over the past year. So once again, we can see that it's the relationship between the capital city energy and what's happening in the major regions holding, and very evident there with the strong growth in Queensland regions. And also,
a little word of warning, though, for Queensland, Andrew. The northern part of Queensland is about insurability, and unfortunately, there's a lot of climate risk there. So we're hearing more and more that insurance companies are charging higher premiums, and maybe in the future, some of those properties will be uninsurable too because of the cyclones and the floods and those risks. So I guess people should just be careful and do their due diligence when looking in those markets.
Yes, Michael, and that's particularly for units in those coastal markets, which are difficult to insure because they are within the cyclone zones and they need higher levels of mitigation. But as I said, I think people are drawn to lifestyle markets.
Oh, great place to live and to vacation.
And with the Brisbane Olympics coming, that will only exacerbate interest in Queensland going forward, particularly
we should actually make it clear the Brisbane Olympics isn't just Brisbane, is it? It also will include Sunshine Coast and Gold Coast, which will help those markets.
Absolutely. Tasmania is an interesting case. We have been reporting a revival in Hobart, the capital city, Hobart. Over the past 6 months, it's bounced back after a quieter period. And we're clearly seeing that once again, if we average what's happening in the major Tasmanian regions, we can see that sort of works its way into what's happening with the Hobart capital city. So some strong growth there. The Hobart local government area up by 8.6%, Clarence up 6.1%, Glenorchy up 4.5%, and Launceston dragging the chain a little bit compared to Hobart. Still up, but up by 2.8%. But that's been more of a consistent performer, Launceston, during the weaker period in the Hobart capital city market. So again, validating what we see with the capital city results in Tasmania, and the same story with the Northern Territory. Michael, we've also seen a revival in the Darwin capital city market over the past year, and that's being reflected when we look at the major local government areas of Palmerston and Darwin. Palmerston has been quite strong over the past year. A lot of new development happening in Palmerston, Michael, as has been happening over the last few years, up by 9.1%. And Darwin up 1.6%. So it is interesting to reflect on the regional market performances because they certainly, not just from a point of view of being interested in what's happening at the local level, but they certainly reflect what's happening in the capital city markets.
Sure. Now, I know that my housing market keeps a careful watch on construction costs. The building cost crisis began in 2021 over COVID. Building costs flew out, making it very difficult for builders to make a profit. Many made a loss and then the process went broke. It also made it very difficult to bring new developments, whether they're apartments or houses, onto the market at a cost the market would be prepared to pay. And over the last little while, the acceleration of the cost of construction dropped. But Andrew, your latest figures suggested that it's actually had an uptick now, with annual costs of building increasing significantly.
Yeah, it's interesting, Michael. As you said, the impetus from the previous Liberal government's home builder policy in 2021 created way too much demand in terms of matching supply. There was critical shortages of labour and materials because of that high demand for new houses. That pushed house prices through, house building costs through the roof. We run a monthly house building cost index, which is derived from building approval data. And it was, as you suggested, started to taper off at last year. That escalating costs have flattened out. Costs were still significantly, 50% higher than back in the pre-COVID era, but nonetheless, the rate of growth had started to ease, which was a bit of a relief for those wanting to secure a new house. But we've actually started to see an escalation recently. It's interesting because our index is sort of moving in another direction compared to the building costs index that comes out, or the building cost measure that comes out through the ABS in the inflation data, which will be watched closely next week, Michael, when the June inflation data is released, and we'll be discussing that. But we've been, as I said, tracking an escalation over the last couple of months in house building costs, which has sort of gone against. It'll be, as I said, interesting to see what the ABS says about house building costs in their June quarter. Now, this is monthly, this index, of course, so it's a bit more up to date, but it is May because we haven't got our June data released yet. But as I said, we've seen that escalation. Now, it's interesting, Michael, that we're also seeing a decline in house building activity, which has been quite strong a year ago. We certainly saw a consistent revival in house building approvals, but that's flattened off. In fact, house building approvals, as we discussed in a previous episode, Michael, have actually fallen in Melbourne and are flat in Brisbane, which are two of the biggest centres for house building approvals. So maybe the higher building costs are a reflection of that. Either, higher costs are coming because there's less activity, or, there's less activity, which is being caused by higher building costs. But nonetheless,
The old chicken and the egg argument, Andrew.
That's right. I was going to say that, but you got in. But so it's interesting to see that. And that is not good news, of course, because that only reduces the supply line for housing, because builders, even if they get a building approval for a house, then are confronted with higher building costs, which make it problematic to actually, put the buildings out of the ground, the homes, the houses out of the ground. So not good news for our undersupplied housing market. And when we look at the annual growth levels, they're now back up to 7.1%, Michael, which is pushing double what it was a year ago. Our escalation was 3.8%, which historically is still a high number, 3.8%, but moving back up to 7.1% really is a concern. And over the last couple of months, it is a breakout. So it'll be interesting to see, what the ABS reports in terms of house building costs, and theirs is a quarterly number set, although they do have a monthly result next week as well for June, and to see whether this is just a blip in the series. But as I said, there is some correlation here, because we have seen a collapse in house building approvals built in Brisbane and Melbourne, which is a real concern, particularly in Brisbane, which is clearly has demand ahead of supply, as reflected by higher house prices.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Andrew, in Melbourne, it was a miserable weekend, cold, and much the same in Sydney, I'm told, but it didn't stop buyers coming out to auctions. The auction markets, I'm almost scared to use the word booming, but they're getting to that territory.
Yeah, I used it, Michael. I'm a bit trepidatious about clickbait headlines, but it is what it is. And yeah, you're right. It's been a cold, what we expect period through July in terms of the weather, but it's been anything but cold in terms of our auction markets. They've been almost red hot. Well, certainly they've been hot. And that continued over the last week of July. We're now really starting to get the sense of the spring market approaching, which is officially 4 weeks away, but we're now starting to see a rise in listings coming through. We track listings on a daily basis, Michael, and there's no doubt that listings are now coming through in anticipation of the second half of the year and the spring selling season. But we had some really strong results at the weekend again, even with higher listings, and there's certainly a vibrant buyer appetite for listed homes generally. So some of those results, and we use the word boom advisedly, but we had three of our capital city auction markets just under 80%, Michael, and 80% is sort of the benchmark that we use for boom time conditions. So we're approaching boom time conditions, and it's a great springboard into the spring selling season. It continues. And in Sydney, extra auctions as expected now. We'll see auction numbers rising. Another strong clearance rate for Sydney, 77.4%. Higher than a year ago, although listings were down a little bit compared to the same period last year in Sydney. Melbourne, once again, Michael, has produced the highest weekly clearance rate of any of the capital city auction markets, 78.1%. That is the highest clearance rate in a couple of years that Melbourne has recorded. So a very strong result there for Melbourne once again. And as I said, once again, the highest of all the capital city markets. And they've produced that top result a number of times, Michael, over the past few months. So an auction numbers up by 100 compared to the previous week, down, similar Sydney, down a little bit compared to the same time last year. But look at the comparisons in the clearance rate over the past year, Michael. 65% clearance rate a year ago in Melbourne, 78.1%. So that tells the story of the revival in the Melbourne market. Brisbane recorded one of its highest clearance rates for some time. Of course, we know Brisbane has a different measure in terms of activity comparisons with clearance rates, but that's quite a strong result in Brisbane and well ahead of a year ago. And auction numbers were high as well, Michael, 177 auctions, a little bit lower again than the same time last year. The gee whiz buyers are up and about also in Brisbane. And the same story in Adelaide, Michael, 77.2% clearance rate in Adelaide, well above where it was a year ago. And auction numbers were also higher than the previous week, although similar to all the other capitals, lower than the same time last year. Now, Canberra, we can really start talking about a consistent revival in Canberra. Still not, in the real seller's market environment, which we would call with 70% plus, 65.2% in Canberra. It was consistently in the 50s for most of the past year, up until the past few months. And it's now starting to really move ahead into, much more fertile environment for sellers. And we can see when we compare it to a year ago, almost 10% higher, the clearance rate. And the trends tell the story, Michael, with the Sydney trend rising over the past few months and now well ahead of a year ago. And Melbourne's quite spectacular when we see the series there well ahead of a year ago and just has been rising all through the year, with the exception of April and March, which are holiday periods, particularly April. And Melbourne tends to have more of a seasonal effect on its housing market during the holiday period. I think Melburnians really like a good holiday and aren't too fussed about what's happening in the housing market. But also Melbourne has a much more substantial prestige market, Michael, and the prestige market tends to take a more significant pause during the holiday periods. Brisbane, same story. These series are remarkable, consistent, Michael, showing the rise in activity over the past 3 or 4 months and higher than a year ago. And of course, this is the interest rate driver that we shouldn't be surprised at, that's pushing up activity. Adelaide, coming from a period in Adelaide at the end of last year and the beginning of this year where it certainly came off the boil. It was Australia's strongest auction market last year, and now back up in town with some quite consistently high clearance rates over the past few weeks. And Canberra, I guess we could just about say Canberra's back in town, Michael.
Yes.
70% clearance rate there to justify that, but certainly a revival market, the Canberra market, which has been stagnant for some time. And I think that Canberra sellers and buyers will be looking forward to that spring market going forward. If you're looking for the latest auction results, you can get it on my LinkedIn channel, Doc Andrew Wilson, every Saturday night around about 6 o'clock for the snapshot, and Michael releases the full national report, which includes the regional results for Melbourne and Sydney and the top 10 sales for each of the capital cities under the hammer over the past week. So we now enter the August market, Michael.
That's right. I just want to reinforce what you said a moment ago. It's actually the trends in the auction clearance rates that are more important than just the individual weekly results. And also it's important to recognise that this is one of the best leading indicators of what's going to happen to house price results that come out each month or weekly even. So I look forward to catching up with you in a couple of days' time at the end of this month to see how July went around Australia.
Yes, it'll be interesting. And, I guess we could almost preempt what the results will be. But as you said, the auction results are a very good forward indicator. And gee whiz, not just a forward indicator for what's happened over the month, but it'll be interesting maybe we can discuss just whether this is one of the strongest springboards we've had into the spring selling season in some time.
Catch up with you in a couple of days for the end of month report, Andrew. Thank you.
Yeah, thanks.